Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. Morgan Stanley just weighed in on NEO stock following JAC asset sale. NEO is trading at the time of this recording at $7.94, 35 cents up. And partly due to this Morgan Stanley report. The 52-week low is $7. The 52-week high is $16.18. I hold 2,260 shares at $3.53. And on the SoFi platform, I hold another 356 shares at $9.20. So what did Morgan Stanley say? Morgan Stanley basically said what I was saying, that NEO is planning to become more self-sufficient. Last week, Anhui Jianghuai Automobile Group JAC announced plans to sell the factory assets with a net book value worth of $574 million and an evaluated value of about $615 million. Among the assets are two factories where it manufactures vehicles for NEO. So we already know this, right? While no buyer of the assets has yet to be confirmed, according to the rumor mill, the Chinese EV might be seeing a purchase of the assets, although neither company has yet to comment on such reports. Mulling over the prospects, Morgan Stanley analyst Tim Hsiao believes it could make strategic sense for NEO to access potential investments related to the F1 and F2 plants. On balance, the analyst went on to say, "We consider the transaction to be strategically positive for NEO. If NEO were to gain greater control over production, it could better mitigate the risk associated with supply chain disruptions and production hiccups in future, as well as enhancing overall operation efficiency and stability," which is one of the biggest things with NEO in the past, like I said, where we would reveal a product, but it wouldn't be ready for customers to get it for months later. Sao reckons the plants could be worth around $232.3 million, and based on NEO's current net cash balance of approximately, are you guys ready for this? $3.28 billion, as well as the recent ejections of $738 million in funding from CYVN Holdings, that's the Abu Dhabi government, and an additional $1 billion from a recent convertible bond issuance. The analyst believes that any potential investment made would likely have a minimal effect on both NEO's net cash position and its operations as 2024 comes into frame. And I talked about this before. They talked about the convertible bonds, right? NEO recently had convertible bond issuance, and a lot of individual investors panicked and ran and sold. And the trolls came out licking their chops. But I said, when a company does something like this, but they use the money to grow the company, and it's not because the company is wasting money and they need to raise funds, that's a big difference. And we need to hold with diamond hands and buy the dip. I said that. So as you can see, perhaps some of the money from the Abu Dhabi government that we just got, or these conversion bonds, will be used to buy this factory. So this is why I said, even with ChargePoint, where this huge company, this huge institution just gave ChargePoint a lot of money to continue to build out at a massive rate in America, to become profitable quicker. People panic. The individual investors panic, but the corporations are buying. I'm a little bit depressed this morning because the stock on ChargePoint is going back up. And I've been buying the dip, buying the dip, buying the dip. Now I have to wait again. Anyway, that said, Sao adds, amid lingering concerns about NEO's cash flow, investors are likely to focus on whether NEO can narrow its cash burn rate sufficiently from third quarter by improving scale and workable capital, which is what we're doing, because I'll do another video later on to show where we're bringing the times down on delivery times, right? So NIO is improving and keep innovating and moving at a faster rate now. All told, how rates NIO shares on overweight and a buy rating? Almost every analyst is giving us a buy rating right now, along with an $18 price target. $18. Indicating shares could surge 147% over the next year. So why did he say that? I think a lot of analysts are looking at our sub-brand also. So they're giving us such a high rating at $18.70. So I want you guys who are panicking and are just holding and not buying the dip to listen to this. Because use common sense. Think about it. When we release that sub-brand next year and they start selling like hot bread because they're going to be cheap, what do you think is going to happen, guys? Our delivery numbers are going to skyrocket. Because now they will be catering for the middle class and lower middle class, not just the high end. Excuse me. The street average target is not quite as exuberant, but still offers plenty of gains at $14.24. So the street price is still $14.24. The figure suggests 1 year upside of 88% based on a mix of 6 buys and 4 holds. The analyst consensus rate the shares a moderate buy. So remember, these ratings go up and down based on what the company is doing. So when we, like I said, if we buy this factory, bang, the rating is going to go up again and the price target is going to go up again. When we release the sub-brand, the price target is going to go up again. That's how it works, guys. So I hope you guys found this video informational, but most of all, I hope you guys find it inspirational. So while the trolls keep attacking me, they keep encouraging me to keep doing these videos for you guys. If you guys found this video informational, encouraging, guys, please give it a thumbs up. It'll help encourage me to keep doing videos for you all, just like the trolls. But the trolls do it in a negative way. If you haven't yet subscribed, you might want to think about doing so, because in this channel, we get rich or we die trying, guys. Warriors.